Welcome to Tesla Deep Dives.
The pivotal topic on our agenda today is the $139 billion precedent, analyzing the Delaware Supreme Court's stance on Musk's pay and the future of corporate governance at TSLA.
Good evening. For years, it was a cloud of legal uncertainty over the world's most valuable car company. Now, the Delaware Supreme Court has handed down a landmark decision, reinstating Elon Musk's colossal 2018 compensation package, now valued at approximately $139 billion. This is more than just a massive personal wealth transfer. It is a precedent-setting moment for corporate governance. Musk's reaction on X was swift and succinct. Vindicated. Our deep dive today analyzes what this ruling means for the future of Tesla, its board, and the entire structure of executive pay.
To understand the ruling, we must revisit the 2018 package. It was a 10-year, all-or-nothing grant of stock options, about 304 million shares, tied to 12 highly aggressive milestones, including boosting Tesla's market capitalization from around $50 billion to $650 billion. Critically, Tesla hit all these targets ahead of schedule, an unparalleled feat of value creation. The package was initially valued at $56 billion, but below $39 billion as TSLA stock soared, trading at $481.20 at the time of the final ruling.
This gargantuan payout was challenged by a retail shareholder, Richard Tornetta, who owned just 9 shares. In 2024, the Chancery Court, led by Judge Kathleen McCormick, voided the package, concluding that the directors were conflicted and the process had failed the entire fairness test because key facts were hidden from shareholders. This ruling sent shockwaves, with the judge stating the pay was unfathomable.
The Delaware Supreme Court's reversal, however, zeroed in on the remedy, not just the process. The High Court's unanimous 49-page opinion stated that completely rescinding the deal was improper and inequitable. The core legal reasoning? That total nullification leaves Musk uncompensated for his time and efforts over a period of 6 years. By reinstating the plan and awarding the plaintiff a symbolic $1 in nominal damages, the court acknowledged the process flaws but prioritized performance and shareholder benefit, a key precedent for performance-based megagrants. Bullish analysts immediately framed this as a long-term win for the Tesla growth story and control. Gene Munster, a managing partner at Deepwater Asset Management, stated, "For Elon, this is a win because he gets control faster, as exercising the options is expected to grow Musk's voting stake from about 12.4% to roughly 18.1% of the expanded share base." Furthermore, the reinstatement avoids a potential $26 billion charge to Tesla's earnings to replace the award, a clear benefit to the bottom line. Skeptics, conversely, emphasize the lasting stain on Tesla's corporate governance. The Supreme Court's ruling did not overturn the Chancery Court's finding that the board was riven with conflicts. Charles Elson, a prominent corporate governance expert, summarized the skeptical view, noting the decision still serves as a warning to corporate boards. They better have a compensation process free from the kind of conflicts we saw in this case. The plaintiff's attorneys added that they are, quote, proud to have participated in the historic verdict below, calling to account the Tesla board and its largest stockholder for their breaches of fiduciary duty.
Despite the massive dollar figure, the immediate market impact was muted, with TSLA shares moving up less than 1% in after-hours trading. This suggests the market had largely priced in the likelihood of an appeal victory, especially after shareholders ratified the plan a second time in June 2024 with 72% approval. The prevailing sentiment is that while the corporate governance flag is still raised, the tangible risk of a material loss of executive focus, a key concern for investors, has been definitively removed, reinforcing the Musk premium narrative for the stock. Looking ahead, this verdict has 2 profound implications. First, it enables Musk to shift his focus entirely to the new pay package, which shareholders approved in November 2025, and could be worth up to $1 trillion, tied to new robotaxi and Optimus AI goals. Second, and more lasting, the entire legal saga spurred Tesla's move to reincorporate in Texas, a trend that saw other major tech firms like Dropbox, Roblox, and Coinbase follow suit. This $139 billion case has effectively created a new, more permissive precedent for rewarding outsized performance,
even when board process is flawed. At the new Texas Incorporated Tesla, specifically the composition and independence of the Compensation Committee, as the Supreme Court's implicit criticism of the old board's process is a mandate for change the company can no longer ignore.
Let me know what your thoughts and leave your comments. Thank you for joining us for this crucial deep dive. To ensure you never miss a pivotal analysis, please like the video, subscribe to the TeslaDeepDives channel, and hit the notification bell. Your engagement fuels our critical research.